everyone. This is Ken Kraetzer for CBSI Services Talking Business. And today we have a special opportunity to talk about and review the American Banker Card Forum conference just concluded. It was run Tuesday, September 28th, Thursday, September 30th, with a great group of bankers participating. And to share insight on it was one of the hosts of the event, and that is Daniel Wolfe, who is a content director, community banking, credit union, and payments writer at the American Banker. Daniel, good to talk with you today.
Good to talk to you as well. And of course, you were one of those people who was one of the experts who participated. So thank you for that.
I really enjoyed it, and representing our company, CBSI in Harrison, we really enjoyed participating and being invited. Now, Daniel, I think if there were two points of the conference, a lot about during the pandemic, how banks worked with their customers to implement digital technology, digital experiences, and a lot of customers moved to digital during the pandemic, and everyone said they're not going to go back.
Yeah, no, that's something that actually seemed to kind of permeate through a lot more than you'd think. It's more than just people using a mobile wallet to buy bagels in the morning, because every bank employee is also a consumer and is also personally going through what a lot of the broader customer sets are going through. They may also be small business owners who have their own struggles outside of the work, if they have like an Etsy shop or their spouse or partner has some small business. So they may see insights into beyond just what you think. And a lot of that is affecting a lot of decisions being made in a lot of categories.
Absolutely. And the opening session that you hosted with Radha Suverna of Citizens Bank, he talked about looking for an enhanced, simplified customer experience and opportunities for collaboration. Some very sound advice from your opening guest.
Yeah, he was a very good person to talk to. Radha had some interesting things to say about just simple, basic things like Zelle. They succeeded because of that simplicity, that collaboration that meant the interface is the same for a customer of Citizens Bank as another bank. So if you were on the phone talking to somebody about how you wanted a payment, you could say, hey, just navigate here, do that. The only thing that would be different is the color scheme. But it also spoke to the bigger issues of just needing a digital interface for a lot of things that we may have managed separately over the course of our lives. They're building a payments hub that would actually, instead of saying, okay, I want to come in and have a wire transfer or an ACH or send a paper check or what have you, you would go into the bank and say, okay, I need to pay this person or vendor. It needs to arrive in X amount of time and it has to be X amount of dollars. What is the best way to do that? So the customer doesn't have to know the banking lingo or the specific constraints of each product. They tell you what they need, and the bank decides what is the best thing for them.
Yeah, absolutely. Now, there was a session, your colleague John Adams spoke to an American Express executive based in London, John Castanon, who talked a lot about referral marketing that they were doing to be relevant to young people in that area, and it was a good session. You came back and right after that and did a talk with two attorneys, with Brian Tate, who runs the Innovative Payments Association, and Eric Goldberg, an attorney, and talked about how Washington's changing with the new administration, new regulators, and especially at the OCC, the Office of Control of the Currency, and the CFPB taking on new leadership, and what that's going to mean. What did you take away from the two attorneys?
So that was, I think that might have actually still been John Adams, my colleague, not me, but I am familiar with the session. So that was the gist of it was about the pace of regulation versus the pace of financial and fintech innovation. That there's a lot of innovation happening that would that is happening faster than regulators can react to it. And that doesn't mean regulators are oblivious to it. It means that the regulation is coming, that there is going to be somebody who's paying attention and says, hey, you know, these companies are offering bank-like services, but they're not banks. They're partnering with banks, you know, so there is regulation happening. But from the consumer's perspective, they may be expecting the same level of control and regulation and trust that they get from a banking relationship from a company that isn't a bank. So the question, and a lot of the conversations, not necessarily at this session, but throughout the event, were about the new wave of buy now, pay later companies offering installment loans, pay it in full, and each has a different sort of approach. Do you pay it back on a credit card? Do you pay it back directly? How do you pay it back? Can a bank be involved as the face of that loan or not? And of course, you know, there's going to be a lot of attention as to what each of those models means, both for the consumer and, of course, you know, for the merchant, the lender, anybody involved in that process.
Yeah, the New York Times in their article about a month ago on buy now, pay later talked about possible oversight by state regulators. I think they said California. Do you feel like that regulators are going to come in and analyze this product, buy now, pay later?
So, I mean, I don't have a crystal ball. I can't predict the future. The point of the session was that just because you know, the regulators didn't react to a specific trend right away doesn't mean they're not paying attention or not sitting on the sidelines. So the exact nature of what might happen with earned wage access or early wage access, which is another trend we saw, getting your paycheck ahead of the usual 2-week pay cycle over the course of the pandemic, there's concerns there about our consumers overextending themselves. And you know, you have to make these lending decisions much more rapidly than you might in a bank branch or through a mailed-in credit card application. So what are the implications there? So there's certainly a lot to look at, but I couldn't predict the exact shape that would take.
Absolutely. Now, there was an excellent session on security and fraud that Kimberly Monty-Hosel moderated with Andrew Grover, who's an executive vice president at Bangor Savings. And he talked about providing a human touch during the pandemic for his customers, and especially reaching out to every customer who had a fraud alert to make sure they were okay. And what sound advice from an experienced banker that was? He was a terrific guest in your on that panel.
He was, and that was definitely my favorite session, and I wasn't even a part of it. No, that was a really sharp conversation, and it wasn't just that. I think the whole gist of it was putting the customer first in your whole fraud strategy, even if it means that you can't place as much emphasis on actually catching the fraudster as you'd want to. As he said, there's a cost to that, and you are tying up a customer or their funds while you're investigating a fraud. And if it's a false positive, and he said up to 90% of the time, when they're dealing with synthetic fraud, it could be a false positive, then that could be just a really bad experience for the customer. So you may want to err on the side of working with the customer, even if it turns out that they're a scammer and you're able to catch that later on, because you don't want legitimate customers, and especially if 9 out of 10 of them are legitimate customers, going around ruining your reputation, saying, listen, I tried to make a payment, I tried to buy gas, and they stopped me because there's so much fraud going on at gas stations, so they'd rather, you know, hold on to the money than, you know, let me get back on the road, and stranded me. So, and specifically with reaching out to the customers, it was also an interesting sort of insight about taking a bad experience and making it a good experience. If somebody doesn't know how to respond, how to get a card reissued, for example, they follow up. And they will also say, hey, you know, if you're nervous about this, we have an app that lets you turn off your card if you think that, you know, you're not going to approve any spending in, you know, the next week ahead or what have you. And of course, it'll block you when you try to use your card. And, you know, the Grover, the chief risk officer there, did say that that's happened to him because he's a chief risk officer, so he's paranoid about that sort of thing. But it shows the customer it's working, and it shows them that they are in control. So there was a lot to that event, that particular session, that I found fascinating.
Absolutely. I think it's a whole idea of how you introduce technology to customers. Some people adapt very quickly, maybe younger people, but you know, for me, it's one step at a time, learning a new way to do banking or use technology, and I think that came across in the sessions of your conference. And
Yeah.
yeah, and then there was a good session on adaptation of cards to the new normal, led by John Cable of JD Power, and Courtney Gentleman of Synchrony had a lot of good points, and she talked about 45% of U.S. consumers are starting to use digital, and she saw it being a 4 times increase from 2020, and that 80% of customers will not go back, that they are now going to be digital customers. And that's a big, it's what everybody's saying is the adoption of digital during the pandemic has accelerated by 4 to 5 years the usage. How do you see that changing banks when all of a sudden you've got critical mass using digital?
It's not even just the shift to digital. What I found fascinating about that session was just the very nature of the card products is changing as well, because the digital nature of commerce is changing what consumers expect. And you heard from multiple bankers at this event that they were watching what was going on with travel spending, of course, and they saw the travel, which was this huge spending category for them, all of a sudden just vanished more or less overnight. And so they had to keep these customers engaged. And, you don't do that by saying, okay, well, we'll give you extra rewards if you get on a flight to somewhere that you're, either not allowed to travel or might be dangerous for you to go. But instead, they said, okay, well, why don't we make this more flexible? Why don't we just do cash back or reward different types of activities, spending, incentivize digital payments? And that flexibility may not be the right thing for everybody, but it is something that they're going to keep doing going forward. I think she also brought up the example of an Uber rewards card that shifted from Uber rides to Uber Eats, because instead of going places, you were just getting takeout all the time. I asked a question during that session. Actually, I was in the virtual audience, and I was surprised by the answer. I thought, okay, well, this trend just means that all these cards are going to be, flexible rewards. What happens to the idea of being top of wallet and saying, okay, this is a card that I use to pay for gas. This is the card I use to pay for dining. And I believe it was her that said that those customers aren't necessarily going away, that they may still want to compartmentalize their spending in some way, but the products are still going to change.
Yeah, I think the session later on co-brands brought that out, that people are still using point travel cards to accumulate points because they know they're going to travel in the future. And so they're still preparing for that day. Now, you had a great session with keynote with Krista Phillips of Wells Fargo, head of credit card marketing, products, loyalty, and digital. She had just joined Wells Fargo less than a year ago, and talked about just the adjustment of joining a large company and having to work virtually and trying to work with, she said she has 300 people on her team and having to work at that. And she talked a lot about now spending time with people, one-on-ones, informal chats, coffee chats, as she described them, and really understanding where employees are coming from. And I think it's been so important during the pandemic to talk to staff, talk to customers, talk to partners, and just have informal, short conversations. How's everything going? I thought she really did a great job with that point.
She was very interesting to talk to also, because one thing that we've seen, and I got to say, these conversations about leadership are some of the most fascinating to me. Now, I don't manage 300 people like she does. I manage 6, but it's still, there's a lot relatable about that, regardless of, where you come into this conversation, whether you're a banker, card network, technologist, investor, what have you. We all have bosses. We all have employees. We all have these questions that we need to address in an industry where, regulation or the need to be in person and present is important. So with that, there was something that actually came out of it that I really liked, which was the idea of the people who were remote beforehand may have felt a bit left out, but now the playing field has been leveled. And even though, you may be frustrated by every meeting happening on Zoom, everybody has the same size box on Zoom. There is no advantage to your location or disadvantage to it. Everybody has the same sort of seat at the table, so to speak, and the same visibility. And so even though you may see that as a challenge or unfamiliar or frustrating, it's still a very good way to make those connections and to manage and meet people. And so I found that absolutely fascinating as well.
And Kate Fitzgerald had kind of a nice talk with Chanel Bean of Bank of America about using Zelle and the Zelle team to send checks to a basketball tournament that I was very familiar with, the TBT summer tournament, professional tournament. The winning team of 64 entries gets $1 million, but they divvy it up based on preset percentages that it's not the same for everybody. And she talked about how helpful Zelle was to send an immediate transfer to the players who could then use the funds in the city they were in. They were traveling, most of them, and how beneficial Zelle was, and how much that product has grown in the last couple of years.
Yeah, no, as we were saying before, Zelle was designed to be the same regardless of what bank you're at. So it's to its advantage that it's so straightforward. But at the same time, something I've noticed personally in my use of Zelle and other payment products as well is just it does seem to cater to people with different levels of like technological comfort. You don't have to download a separate app. It's in the banking app you may already use, and it doesn't have to be done mobile. I have a friend who isn't really a very big smartphone obsessed person. He would probably still have a flip phone if that was still commonplace. Excuse me. And anytime that we've had to exchange money, he would wait until he was back at his desk at his computer. And I always found that weird. I'm like, you could do it right now. You could do it right now. But, it accommodates his comfort level of wanting to do that, from his desk where he's best suited to do that. So it even being more of a high tech thing, I can see it as being accommodating as well.
And you had a great session with Wilsn from UMB Bank. Really has had a tremendous career in banking, and she talked a little bit about the impact of automation in organizations. Could be a bank, could be in a client, and she said, "Let's embrace technology to make our quality of life better." And I thought that was a great point.
Now, it wasn't just a strategy for her. Actually, when we did our prep call before the live event, and as a reporter, I'm just so used to going through and saying, okay, am I pronouncing your name right? Am I spelling it right? Do I have your title correct? And when I got to that question, do I have your title correct? She says, well, actually, 48 hours ago, I got a new job here at the bank. They had promoted her to head of product and technology, or chief product and technology, or information, one of those. Very, new position for the bank, very important position. And she was in charge of two groups she is now in charge of two groups that had previously been separate. And while, of course, being so new on the job, it's still been only a few weeks. She couldn't talk too much about the experience. The philosophy behind it is very important and critical to her bank to keeping nimble, because that silo that exists between product and technology is a barrier. It slows things down, and you may be developing a product, and now then you find out the technology people need a much longer time frame to implement it than you thought, or the technology people might not understand the customer insights that the product people have. And so making that all part of one organization within the bank has the potential to really make them a lot more nimble and able to respond to this fast pace of consumer demand in payments and other technology.
Very impressive young lady and banker. Now, Kate Fitzgerald opened up Thursday with a talk with Barry Baird of TD Bank, and it was a great listen. He talked about needing to keep your ear to the ground to hear, how customers are changing, how they're using your products, and really about, while operating 1,100 stores, as he called it, they had to quickly pivot to upgrade some of their digital properties when the pandemic hit. And then he said, you got to follow the customer, make sure you solve the customer's problem. I thought Barry Baird offered a lot.
Yeah, no, it's an issue that many banks have faced, of course, because you think, okay, we're all locked down. Maybe what is the importance of branch. More people are going to digital channels, but they need that human touch. They need that human support as well. Everybody's needs are different. You have, like we said before, consumers, small businesses, et cetera. And not necessarily at that panel, but TD was also in a different TD executive was in a panel with Western Union as well, talking about the need to work with a company like them to enable small dollar cross-border transactions as well. I mean, the world is so digital now that there's new use cases, new needs, and if the banks aren't finding a way to provide them, then they might lose customers to a digital or a fintech sort of provider.
Absolutely. And then we got to my session, which I really enjoyed. John Prendergast of TD Bank, Jacqueline Molnar of Western Union, Helen Herring of First Century FinTech Bank down in Georgia. And Helen offered a lot on how they partner and work with fintechs to expand the technology that they can provide to their customers. And John Prendergast really spoke again to the point that a lot of customers hadn't adopted digital technology, digital servicing, but by communicating and reassuring customers, giving them information and education, they served their customers well during the pandemic. And Jacqueline Molnar is an attorney, talked about cross-border transactions that Western Union is a leader in, and adopting a more digital way to move money, and that it's here to stay. And also the amount of activity there was in the holiday season last year with transferring, sending money as a gift rather than physical items. So I really enjoyed that session. And just to finish up, you concluded the conference with a talk with David Britton from Experian, and also Charlotte Principato of Morning Consult, and they talked a lot about security and developing consumer trust. But I thought Charlotte had a good point that the digital environment really wasn't designed for the amount of security that now needs to apply to it. It reminds me of what Nicole Perlroth, the New York Times, often says. What was your thought about that session on security?
Well, I mean it's a lot of I mean it's important, it's sharp, and she's right, and they were both right. The username and password is something that we're so accustomed to that you don't often stop to think how ridiculous it is. That something and how long we've been using some passwords or how we come up with them, it based on just things like birth dates, names of pets and stuff that we're supposed to use as security questions, and that there's definitely a lot of security that was built into the way we handle money and the internet and commerce that was built into it after the fact. So and the nice thing that I got out of that conversation is that consumers are more willing to think about and open to talking about security than they were in the past. Years ago, before we all had biometrics in our phones, I remember writing stories about, a few, ahead of their time, payment companies that wanted to lock your payment to your fingerprint or authenticate you in a branch by your fingerprint instead of showing an ID. And a lot of the feedback I got on that was, nobody is going to want to do that because the only time you ever give your fingerprint over is when you're being arrested. And nobody wants to feel that way when they're in a bank branch, especially when they're in a bank branch. But people are more comfortable about that. Where security, bringing it up would incite that fear. Now people understand. Now people are taking more responsibility for their security. They're using two-factor authentication. They may even feel that they don't trust somebody if they don't offer that sort of thing. So it helps a lot that the consumer has come a long way and is willing to have that conversation and understand it. That said, they still expect a lot to be happening in the background on their behalf. There's only so much we can expect of them. So we can't put the whole burden on them as well. So it is incumbent on banks, merchants, credit unions, et cetera, to make sure that we are keeping up with that demand and serving the consumer in a safe and digital way. Otherwise, data breaches, you lose trust. If you lose trust, then you don't have strong relationships. If you don't have strong relationships, you don't have actionable data, so on and so forth. It all starts with security.
Well, Daniel Wolfe, Content Director, Community Banking, Credit Unions Payments at the American Banker thank you for going through the conference. I thought it was a terrific event. Maybe just tell us what else you have coming up balance of the year this fall.
Oh, I am glad you asked. So, as I said before, like one of the best conversations that we have at these events are the ones that focus on leadership and mentorship. And the next one that we have coming up is our Most Powerful Women in Banking event in November. And you can register for that online. Uma Wilson, who we spoke about, is a past honoree for both the Most Powerful Women in Banking and the Most Influential Women in Payments. And so you can meet more people like that. You can have deeper conversations that don't always happen at this sort of event. So I'm very excited about this one.
Very good. Of course, lots of material at your website at the American Banker. Daniel, well, thank you again for spending time and going through the conference with us. A lot of great insight shared. We hope we can do this again.
Hope so. Thanks again.
Thank you. This is Ken Kraetzer for CBSI Services and CBSI Talking Business. We're based in Harrison, New York, and I'm in my home office in White Plains today. Thank you for watching. Have a good day.